Welcome back. Fantastic morning for equities, all-time highs. Let's see what's happening in commodities. Manisha, over to you.
Thank you for that. I'm making it a sweeter Thursday for you because I'm talking about sugar right now, where we have seen the prices gain up in the international markets. We've crossed above 15 cents a pound, and that is a one-month low, one-month highs coming in for the sugar prices. So when you look at the overall move that we've made in case of sugar, it has gained up by nearly 5% for the month of November. YTD, we still seem to be holding on to those gains of around 21%, as you can see on your screens. And this is going to be a second straight year of negative moves coming in for the sugar prices. Well, the reason for this is that almost all countries seem to be producing more sugar. So last year, we were dealing with a deficit of 2.9 million tons. But this year, the new season, that is, we have a surplus of around 1.6 million tons. This is what is coming in from the International Sugar Organization there. Having said that, we are looking at higher production, not just from India, but from Brazil, which is the largest producer of sugar, and then Thailand, which is the third largest producer of sugar. So between these three countries, we are looking at higher sugar production this time around. Having said that, India will also export 1.5 million tons in the global market in the new season. That would mean more sugar entering the international markets there. Interestingly, when you look at the new season there, almost all agencies which have come out with their numbers yet, whether it's about ISMA, NFCSF or CRISIL, are all talking about 35 million tons of sugar this time around, which is nearly 18% higher from what we had in the previous year. Reasons for higher sugar this time around is one, higher cane acreage. The second is about favorable weather. And we also are looking at higher yields this time around. The India sugar industry has a lot of concerns, though. So even as we are looking at higher sugar production this time around, the MSP revision for sugar has not happened since 2019. At that point in time, the sugar prices were set at around 31 rupees a kg. That is where it stands right now. While the cost of production has increased to 41 rupees a kg, that is because you have seen constant hikes in sense of FRP from 275 to 355, but it also has been about the state advised price, which is SAP, which has been increased. Add to that the bonuses as well. So the price that the mills are paying to the cane farmers is much on the higher side, but the sugar realizations not so much. The other thing really is about the ethanol prices, which also have to be revised for a third straight year. We haven't seen a revision in that. And this season is started. Markets are anticipating could happen in the next fortnight or so. The other thing is about the concerns that the sugarcane distilleries are working at less than 50% capacity. So when ethanol blending was started and the whole plan was put out, it was to ensure that the sugar goes into this. But if you look at the rotation, or rather the ratio right now, that stands at 30 to 70. So 30% is what we are seeing coming in from sugar, and 70% of ethanol right now is coming in from grain base. A bit of a heartburn when it comes to sugar industry there. If you look at the global prices, they have declined by 22% in this year. That doesn't augur well as well for the exporters right there. And then it also has been about volatile production trends, compensation from the, competition from the gur and unorganized khansari sectors as well are some of the challenges that sugar as an industry seems to be facing on.
All right. Thanks very much for that, Manisha. Appreciate you taking us through top of mind in terms of the commodities and soft commodities in focus.